In this video, I will explain a new price action based intraday trading indicator I designed personally that helps to take trade in equity, futures, and options. This indicator is freely available in TradingView. Anyone can use it for intraday trading. This indicator also generates buy and sell signal. Hence, you need to watch the video completely till the end to understand how it works. Traders also like to use multiple charts in one frame, but TradingView charges a premium of 2000 rupees to 5000 rupees per month to view 4 to 8 charts in one screen. So I will explain a simple trick to use multiple charts in one frame for free, that too without using any broker account. Besides, this video will cover many helpful topics related to intraday trading. I am ready to teach. Are you willing to learn? You drag it outside, okay? You drag it outside. See, now it became like this, right? You minimize it. For example, see here. You minimize it like this. Let's say you wanted to use 4 chart in one frame, okay? So you minimize like this. You keep it open like this. Wherever you want to keep it, you can keep it open. Now what you can do is you open one more TradingView thing. Or you open one more charts. Okay, you take it outside. Okay, the same logic. If you minimize this, there is already one. You can bring one more window like this. You can keep it open. Hi friends, sorry for the interruption. I recently started making highly beneficial videos not only in trading investment but also on personal finance topic. So all these videos are available if you become a member to my channel. So link is given in the description. So click on the join button, become a paid member and you enjoy all the content. Thank you. New intraday trading indicator. Friends, I need to give a small background before introducing this indicator. So please remember this indicator is useful only in intraday trading. So please don't try to use this indicator in any other time frame, okay? That's one thing. And second thing is we need to use this indicator only in 50-minute time frame because I have a trading strategy which works well, which shows good results in 50-minute time frame. So you need to use this indicator only in 50-minute time frame, okay? Don't use this indicator in any other time frame, okay? If you think this indicator is also helpful, maybe in another time frame, like 5-minute time frame or 10-minute time frame or 30-minute time frame, so please comment your opinion. If you think that strategy also works well in with that time frame, then probably I will try to add this feature for that time frame as well, okay? That's one thing. And second thing is methodology. So always remember a trading strategy is highly essential in intraday trading because it provides a clear plan for entry and exit with discipline, right? On top of this, a well backtested strategy helps in managing risk and controlling emotions and helps to make consistent profits in intraday trading. Okay, so that's one thing. And price action versus indicator. Whenever I talk about an indicator, many people comment or they say that price action is superior, indicators are not superior. They comment like that. There is no such thing as superior or inferior, friends, because if you are really making money either through price action or indicator, then what you're making is right. But if you're losing money either through price action or indicator, then what you're doing is wrong actually. Okay, so that's important thing. That's the basic rule in trading. However, nobody can comment on this indicator because this indicator is only a price action. Okay, it gives certain signals based on price action only. So it is not an indicator. This gives an illustration based on certain price action in intraday trading at 50-minute time frame. Okay, so it's purely price action. You will understand once I explain the indicator. Okay, now first I need to explain the strategy, because instead of introducing the indicator, I need to explain the strategy first, right? So once you understand the strategy properly, then only you will be able to use the indicator in a proper manner. Okay, first thing first, this strategy focus on first 1 hour price movement of the market. Okay, so we don't do anything in between 9:15 to 10:15 in Indian market conditions. So we will wait till 10:15 to plan anything. Okay, so the idea is to mark the highest and lowest price levels formed in the first hour, which means we will mark first 1 hour range, both the high and both the low. Okay, that's two things are very important. These levels act as an important support or resistance zone for that particular trading day. Okay, so this is the main strategy. These are the static foundation we will use as per this intraday strategy. Okay, now, see, it's very simple. This is Nifty 15-minute chart. I have this is 1 hour range. For example, in 15-minute chart, 4 candle represents 1 hour, right? So this is the high, 1 hour high. This is the 1 hour low. Okay. So we will mark like this. That's one thing. And second thing is, if the price breaks on the upside, we will take a long trade. If the price breaks on the downside, we will take a short trade. Okay. Is that clear? I know. It is also called as open range breakout. I agree. There is no doubt about it. But there is a problem with ORB. Okay. So what happens is, say this is 1 hour range. For example, first candle, second candle, third candle, fourth candle. So this is the high, this is the low, right? So there is a problem with the ORB or the strategy. So suppose many times price goes up like this for a moment, 1 minute, 2 minute, or maybe 5 minute, and then comes back and trades within the range, or it will come back to this level. Okay, so whenever you see the price movement above this level, you might end up you might end up taking a long trade, but it will come back immediately, hits your stop loss, and trade sideways or downside, right? So in another words, there is a high probability of getting failed trades. Okay, that's one thing. Same thing happens on the opposite side. The logic is, if the price breaks the low of the 1 hour range, our logic is to take a short trade, right? See here, in this case, price traded the low of this 1 hour range for some time. It went back up immediately and it gone upside, right? So if it have taken a short trade at this level, you would have lost money, right? So we need to avoid these two things. Okay, unnecessary trades to make money, because in intraday trading what happens is, it's not about the how many trades you take. Okay, so how much losing trades you avoid in intraday trading, that matters a lot, because not only in terms of the profit and loss you make on the particular trade, but you also pay the brokerage, you also pay the tax for every trade, right? Nowadays tax is, it's highly benefit. I mean, it's I don't know how to explain it, because I'm not getting the right words. Everywhere it is tax, direct tax, indirect tax. If you want to buy the car, it is tax. If you want to even buy insurance, tax. So everywhere tax is going up. So we need to avoid the failed trades as much as possible. That's very important. So I have a simple solution. Okay, there are two filters. We need to use two filters. So one is the first filter is our breakout candle. Suppose for long trade, our breakout candle should close above the 1 hour range high. Should close. Okay, that's important, and it should contain less than 20% of the selling wick. Okay, so the selling wick should be very, very smaller compared to the entire body. Okay, so that's filter one. It looks like this. See, for example, this is 1 hour range high, right? Look at, this is the breakout candle, right? See, price closed above the 1 hour range high, right? This is 1 hour high. So price closed above the 1 hour high. And if you look at the selling wick, it's very chota, it's very minute, right? Okay, definitely it's less than 20% compared to the entire body. I think it is less than 10% also, maybe 5% also. Okay, if you compare this wick to the entire body, it is less than 20%, right? So we need to look for this filter. Okay, this filter is highly essential, which avoids many losing trades actually. So it should be look like this. For example, if the breakout candle is like this, if it is 100, If the high is 110, it should close minimum 108. I know it is not exactly 20%, but again, there is no need to look for exactly 20%. Okay. So it should be, the selling wick should be lesser compared to the entire body. That is the overall logic. Okay. You should get that logic first. And second thing is, we will take the entry only if the price breaks the high of the breakout candle. Okay. So we will not take entry just because the price closed above the high of the 1 hour range, and also it contains that less than 20% of the selling week. We don't take the entry. Okay. We will wait. We will mark the high of the breakout candle. Once the price breaks the high of the breakout candle, we'll take an entry long trade. Maybe in futures buy, maybe in equity, or maybe in option selling, or maybe in options buying. It's up to you. But if you're using options buying in weekly options, you should know slippage matters a lot. Not slippage, I mean time decay matters a lot. Of course, slippage also. But because of the time decay works against you, you need to check. Okay. This strategy highly beneficial for equity, futures, as well as option selling. It works wonderfully well. But if you're using even for monthly options buying, it works fine. Actually, you can apply this logic in stocks with monthly option, but with weekly options buying with Nifty, it's very tricky because time decay always works against you. So you need to find out your own method to overcome that time decay. Okay. So these are the two filters we will use. See, for example, the first filter is price. The breakout candle should close above the high. That is done. Second, I mean, in the second part of that filter is it should contain less than 20% of the selling wick. That's also done. Now we will entry only when the moment the price breaks us, because sometimes what happens is price goes above like this. It displays a candle like this, but immediately it will come back to the range. Okay. Very rarely that's also happens. Okay. So whenever you follow this rule, okay, whenever the price breaks the high of the breakout candle, taking an entry is a wonderful idea, because it automatically, these two filters automatically avoids majority of the losing trades. Okay. So you can go and observe on the chart. Right now you can pause the video, you can stop the video, go to charts, go to 15-minute chart, go to apply 1 hour, and you check very, in any stock or any index, many times price goes up like this and comes back, comes down like this and goes up like this. So if you apply this filter, I'm I can challenge you. Okay. Any stock you take it, mark 100 trades. Okay. So based on these two filter, if you apply this filter, automatically it avoids close to 70-75% of the losing trades. Okay. You do the assignment as an assignment, definitely you will get the power of these two filters. So these two filters are very powerful, and it get rid of more than 70-75% of the losing trades. Okay. One example is, see this. If you follow ORB strategy, open range breakout strategy as it is, you would have taken a trade here, you would have taken a trade here, right? But if you follow the filter rule, definitely you would have avoided the trade, right? Okay, that's the most important thing. And second thing, as part of this strategy, okay, what I suggest is, once the price goes up like this, if it displays a wick like this, then even it shows a breakout with another candle, and don't take it, ignore the trade. You can look for a proper setup with another stock. Okay, because there are so many good stocks are available in Indian market or any other market. So instead of checking the same stock which displayed a failed scenario, you can always look for a better stock with a better opportunity. Okay. See here, if you follow the filter also, in this case also, you would have avoided the failed trade, right? Because avoiding a failure trade is also like a making money, because you don't lose money, right? Okay, that's very important. Don't forget these two rules. It's similar for short trades. Okay, breakdown candle should close below the 1 hour range low, not high. Okay, there's a mistake here, and it should contain less than 20% of the buying week. Okay, and entry will come only below the low of the breakdown candle. I'll repeat once again. Once again, there are two filters for short trades as well. Okay, so breakdown candle should close below the 1 hour range low, and it should contain less than 20% of the buying wick. So our entry for short trade will come only if the price breaks the low of the breakdown candle. Okay, that's very simple. This is a simple example. Okay, this is 1 hour range. This is 1 hour range high. This is 1 hour range low. Okay, in this candle, see, in this candle, it didn't close below the low, right? But in this candle, if you check this candle, definitely it closed below the low, right? And also wick is very, very less. It is less than 20% of the buying wick. Okay, so our entry comes below the low. Once the price breaks the low of this, in this candle, we will take a short trade, and our stop loss will be above the high of this particular candle. Okay, so this is how it works actually. Now we can cross check. Okay, for example, you go to anything. For example, I will go to maybe TCS. I will go to TCS. In TCS, for example, I will apply one indicator. It's called as uh, I forgot the initial balance. Okay, okay. So what it does is just highlights a 1 hour range in slight green color. You can increase the thickness of this color. I will do it for a moment. If you go to settings, you can increase the timings also. Okay, right now I want it, I will leave it 60 minutes because even my strategy based on 1 hour, so I will leave it for 60 minute high low. So I will increase the thickness, I mean the color thickness, so that you can understand in a better way. Okay, I think this is better. See here, if you follow my filter, you go to any stock, for example, see here, it is eligible. Okay, so our entry will come below the low of this candle, stop loss will be above this. So once again, I want to talk about exit first, because after looking at this, you might ask, prices came back to that level, right? See, friends, anybody can talk about entry. Entry is, quite manageable, but I don't suggest a generic exit. Okay, for any strategy, because uh, exit is the most tricky part. You should always remember only entry and exit decides the fate of your trade, irrespective of your experience or reputation in the market or maybe educational qualification. It doesn't matter. Okay, all matters is entry and exit. Okay, so entry we can generalize. There is a possibility we can generalize, but exit, it is very difficult to generalize because people are different, right? Some people, they are comfortable to exit at 1 is to 1.5. Some people are comfortable to exit at 1 is to 2. Some people are comfortable to exist till the end of the day. Okay, but many people may not be comfortable to carry the trade till the end of the day. So people come up with different mindset, different expectations, and different combination, right? Different combo, everyone is different. So that's why I suggest you should define your own entry point. Okay, so you take this strategy, I'm explaining the entry is clear. You should define your own exit. Maybe for example, 1 is to 2 exit. Okay, let's say if you risk 3000 rupees, if the profit comes 6000, you will exit. This is one type of exit. So second type of exit is you will take the entry, and okay, if the price moves 1 is to 1 risk reward in your direction, you will trial the stop loss from the entry, original stop loss to the entry point, and you will hold till the end of the day. Okay, this is another exit, which means if the price comes back, you will not lose money, you will not make money. It is a break even entry. Okay, but if the price goes on the downside, I mean, and in the expected direction, you will end up making more profit. Okay, so this is another type of exit. There is a balanced approach between these two exit strategy. So that one is, let's say you take a trade, price moves 1 is to 1 risk reward in your direction, you exit only 50% of the position. Okay, remaining 50% of the position, you carry I mean, you push the stop loss from original stop loss to the entry price. So in this way, if the price and comes back and hits your stop loss, at least you will make profit for 50% of the position because you exit early. Remaining 50% of the position, it will be a break even. Okay, so this is fine. But if the price moves in the expected direction, definitely you make the profit for the carried 50% of the position, right? So this is a balanced approach between exit 1, exit technique 2. Okay, so you pick either exit technique 1 or exit technique 2 or exit technique 3. So based on your personal mindset and the holding temperament of an individual. Okay, now coming back to this, it's all about it's all about how the filters avoid failed trades. Okay, definitely, suppose if you have a plan to exit 1 is to 2, you would have exited the trade. If your plan is to continue, it will be a break even. So in any case, either exit technique 1, exit technique 2, or exit technique 3, this will be a break even to small profitable trade. Okay, this one. And here, again you will take a trade here. Okay, you will take a trade here because this candle closed below the low, and also contains less than 20% of the buying week. This candle traded below this. Again, your stop loss will be above this, so price traded till here, maybe a break even or maybe a small profitable trade. Okay, here see the beauty, you don't take a trade here, right? Because it contains a selling wick, right? Contains more than 20% of the selling week, so you don't take a trade. If otherwise, if you don't apply the filter, you would have taken a trade, it would have taken your stop loss, right? Now we avoid a losing trade by using this filter in this particular stock on this particular day. Okay, here, see here once again we don't take a trade here because here it's already 230, 215, 230. So this strategy, I mean, generally this kind of strategies works well when you get an opportunity between 10:30 to maybe 1:30 to maximum. Okay, we don't take the trade after 2 or 2:15. So this came around 2:15, 2:30. So it's very close to the closing period, right? So we don't take the trade. Even if you, I mean, assume take the trade, it's only a small loss. Okay, here, see here, we don't take a trade in this candle because there is a big buying week. I know next candle traded below this, but still it is fine. We don't take the trade. As I said earlier, once we see the failed scenario, it is fine. Once again, we don't track or follow that particular stock. I know there is a profit with this, but still we don't take the trade. Okay, you make discipline, because discipline is very very important. You get opportunities with many stocks. There are many stocks available, right? Now, again, there is no trade. It's very close 2 o'clock. Uh, you would have taken a trade here because of the filter. Maybe some profit because the stop loss will be above this. You would have taken a trade here. Okay. Maybe some profit because stop loss is this. Price didn't go back. Here you would have taken a trade here because your entry comes here. Filter, both the filter work fine. Less than 20% of the selling wick, it closed above and price traded above. So you would have made a profit. So my point is not to highlight the point part. Okay, friends. My point is to, if you use the filter, it avoids many unnecessary trade. That is I wanted to highlight. Okay, I hope you have convinced with my logic. Okay. So the indicator which I wanted to introduce personally is, if you type ORB, you will get intraday ORB breakout indicator. Okay, you click on this. What I did is, friends, whenever I explained a ORB strategy in my previous videos, many people, they used to comment saying, I should develop an indicator or a scanner for this. I know I have worked in IT for over 10 years, but to be honest, I'm not very passionate about coding, friends. So what I did is I took the help of a ChatGPT and I come up with some, I don't say it is an expert coding or logic, something like that, but this is a basic indicator which serves the purpose. That's very important. Okay, so basically I will tell you what it does. I will go to, okay, I think this is fine. So basically what it does is it highlights IB range, that is 1 hour range in gray area. Okay, so this is, see this 1 hour range, this highlights in gray area on every trading day. So this is number one. And number two is it draws a two lines, blue line like this, a red line like this, for 1 hour range. So this is 1 hour range high, this is 1 hour range low. Okay, now don't assume whenever it shows short you should take a short at. Okay, so I'm telling you very clearly, this is a warning. You should not take long trade or short trade just because it is showing a short or long trade here. Okay, so this is only is an warning or indication to get alert. Okay, so I'm not defined or designed to send an alert based on this. So I'm just, it just pops up like a short or long. So what it means is, whenever it satisfies the first filter rule, which means price for a long trade, for example, I'll take an example. Okay, see, for example, this is 1 hour on this particular day. On this particular day, this is 1 hour high, this is 1 hour low. Whenever the price closes above the 1 hour high, and if it contains less than 20% of the selling week, it display long. Okay, so if I develop the code to display long after the price traded above the high means you would have missed an opportunity, right? Listen to me very carefully, friend. This is very, very important. If I have designed an indicator to pop up this long or short after satisfying both the filters means you don't get a time to log in and to take the trade, right? So I've designed this indicator in such a way that it pops up long or short whenever you satisfy the filter one. Okay, at least you will get 1 or 2 minutes minimum, and bare minimum you get 1 or 2 minutes. If the price breaks above that level, then only you should take the long trade. Okay, and if it doesn't trade above the high of that particular breakout candle, you should not take a long trade. The same thing for short trade as well. See here, see for example, this is 1 hour high, so this is 1 hour low. Okay, so whenever the price closes below that 1 hour low, and if it contains less than 20% of the buying wick, then it this is filter one, then it pops up short. Okay, that doesn't mean you should take a short trade. You should take a short trade, you will get some time, right? Whenever you see this short, you will get some time. So you should take the short trade only if the price breaks below the low of the breakdown candle. Okay, I hope this is very, very clear. Now what we can do is, for example, we go to HDFC Bank. We can just any stock is fine. We can check how it performed. Okay, see for example, in this particular day, it displayed a short here. So on this next candle, you will the strategy is to take a short trade. Okay, stop loss is above this. It made some good profit actually. So here we don't take the trade. Okay, here we will take, we don't take the trade usually because this we don't get an entry here. We don't follow that particular stock once again. Okay, here this is a proper breakout scenario. We would have taken a long trade here, maybe some good profit. Okay, so here we don't take a long trade. See here, even though it triggered a long here, we don't take a long trade here because see this candle we didn't get an entry, right? So next candle we don't follow, we don't observe. Also, even price didn't trade above the high of this candle, right? That's our important filter two. Don't forget both the filters. Okay, so price didn't trade above the high of this, right, in the next candle. Okay, so that's why, see, I'm saying filter two, both the filters are very, very important. Okay, so in short, you would have taken a trade, maybe loss or maybe break even, that's fine. See here, you would have no trade actually because it tested here, it didn't go up, right? See here, you would have taken a long trade in this candle. Stop loss is below this, it didn't hit a stop loss, you would have made good profit, right? See, that's how it works actually. We can check some other stock, maybe for example in the Unilever. Okay. See, for example, no trade here. See, using this filter, you have avoided one failed trade, right? I don't know where it is saying short. I think it hits here. Yeah, you would have taken a short trade here. So it's not, stop loss will be somewhere here in these two candles. I think price is not traded above the high, so stop loss is intact. You would have made good profit. Here also it short came here. So short came, no, we don't take the trade because it tested here already. So we don't take the short trade. Okay. Once again, we don't take the trade here because it tested here. We didn't get an entry. We don't follow it. Okay. Here it is volatile. Anyway, it is, we don't take it. Here also we don't take it because there is a big, it failed here. Okay. I hope you're getting my point, right, friends? See, here we will take a long trade because this is 1 hour high low. So, this is, it satisfies the first filter. So immediately we will take an entry above in this candle, above the high of this candle. So you made a good profit. So whenever you take an options buying trade with monthly options, it gives very good profit. Okay. So sometimes what happens, friends, is maybe sometimes trading view might it may not display this indicator, or it might block this indicator for some reason, maybe because I've used AI to code this indicator. Okay, for all those reasons what I do is I don't want to hide anything else. I will share the code actually. Okay, so this is the code. I will share the entire code in the description. So if the indicator is not available, maybe you might be watching this video maybe after 1 month or maybe after 6 months. Okay, if you don't find in this indicator, intraday trading, I mean this ORB breakout indicator for some reason, there is. I will share the code. Okay, you copy the code, you come to this Pine editor. Okay, so what you should do is it's available for all the even free users. Okay, so you come to a trading view, you come to Pine editor, click on Pine editor, you copy and paste. Okay, and update and chart. If you just click on update and chart, that indicator comes to the chart automatically. Okay, just copy, paste, and select update and chart. If you publish indicator, it will go to the trading view library, and they might come up with many questions like they come up with many questions actually. Okay, so but if you keep it on update and chart, it updates on your system, but it's not available to general public. So in that case, TradingView anyway doesn't raises any question. Okay, so in this way I'm sharing it free for friends, for all of you. So even if you don't find this indicator, you can copy paste the code, you can use indicator, and you can use it. Okay, now the third important question is, many people say I wanted to use multiple a time frame. Okay, in one window. Okay, sometimes what I suggest is you should use your brain to get it done, right? For example, it's very simple. So what I do is, you can apply this logic. So one simple logic is, you can use any broker indicator. Most of the brokers in India now support TradingView as their platform, charting platform. You can use multiple windows, it's available there. Sometimes but the disadvantage with that approach is you may not get this type of indicator. Okay, so in that case, what you can do is, for example, it you drag it outside. Okay, you drag it outside. See, now it became like this, right? You minimize it. For example, see here, you minimize it like this. Let's say you wanted to use 4 chart in one frame. Okay, so you minimize like this, you keep it open like this. Wherever you want to keep it, you can keep it open. Now what you can do is, you open one more trading view thing. What you open one more charts. Okay, you take it outside. Okay, the same logic. If you minimize this, there is already one. You can bring one more window like this. You can keep it open. You can adjust according to the height and width. Okay, similarly you can open one more also. Okay, this is how you can use actually. Okay, see, for example, I can click on plus, I can click on in the trading view once again. I can go to maybe charts, products, and charts, pull outside. Once again, adjust according to your convenience. I hope you got my point, right, friends? See, I can use like this. So you can use 4 windows or 8 windows like this, and it will run continuously. Okay, so this is how you can use. If you get any problem like this, maybe you can use multiple accounts using multiple email IDs. Then you can use like this. Even if you get a problem like this, you can use two systems, use one screen, maybe a different screen, and drag and drop all the windows like this. Okay, so if you get again problem with that, what you can do is, you can use a broker trading account, and you can use TradingView platform. Okay, so in this way you can use multiple charts in one window, friends. I hope this video is really helpful, friends. If yes, please like the content, subscribe to my channel, and share this video with your friends. Okay, so see you with another video with another helpful content with some more learning. Okay, until then, thank you, see you, bye bye, have a nice day.